market. Today it's Thursday. I just closed my positions about a minute or two ago. I took a trade on the Nasdaq and Dow Jones. Both of them I took a trade each. So going into the day, man, on NQ was pretty simple for me. By the time I opened my charts, we had already swept. I think Tuesday's low, and then I marked yesterday's high. And I marked the low as well, but I prefer to use the Tuesday low in this example because it makes sense, right? So let me just highlight it right there. Tuesday's low got swept, right? So by virtue of that, I was already kind of bullish because of that. So after we swept Tuesday's low, right here we have, I think, an SMT with. Let me go on the lower time frames to verify first. Yeah, I think so. Is it? Let me check. Yeah, if I'm mistaken, sorry. But if I'm not, then I guess I'm not. Let me check. 15. So we sweep off that. We swept. Okay. So we have this SMT divergence with the Dow Jones. And the reason why it's an SMT, I'm sure you guys know it by now. It's because on NQ we failed to take out the slow that swept Tuesday's low, and on the Dow Jones we took out the low that swept Tuesday's low. So let me see what I marked as my draws on liquidity. I'm not even sure what I marked, but maybe that's the London. Is it London's high? Probably is. I'm not sure. I'm not sure anymore. Right, yeah. I think these were Sydney highs or Asian, whatever you want to call them, I guess. Well, I'll know what my drawn liquidity was when I go on the lower time frame. I'm really sorry for that. Let me remove those draws first. I went on the 15 minutes time frame and I saw this bullish fair value gap. Alright, yeah, as the PDRA that I was going to use to take bias to the upside, obviously. The 15 minutes busy, clean, and we printed this right here, and then blah blah blah, market open, we just touched and then immediately went bull run, right? So when that happened, I went on the 1 minute time frame. I saw that we touched with this opening candle, and then we printed this candle right after. So meaning this was our first presentation fair value gap, or first presented fair value gap, or something like that. I'm not really sure anymore. And that's the fair value gap I used to take my longs, because we had mitigated our 15 minutes bullish fair value gap. Then we broke structure on the 1 minute to the upside. We were left with that first presentation fair value gap. So, and then I took my trades based off of this. I think I got it right here, man. I'm not really sure anymore. Hold up, let me check. Yeah, somewhere around there. And then my stops were 20 pips. Yep, 20 pips. And my TP was 50 something. And I'll see what those highs were that I based my TP off of. Yeah, I'm assuming it's this one. Alright, yeah. Then I'll know. Well, there was Sydney or Asian highs, I'm not really sure, but yeah, that's what I based my draw on liquidity as, because price was really playing around a lot. I was like tired, you know what? Let me just close my position, man. Yeah, let me just close my position, and then I closed my position right there. So that's the trade of the day, man.